The local market busted out its best week since mid-March. Despite the market losing a bit of ground today, it's up 2.8%. Ahead of reporting season starting next week, insurer IAG flagged lower than hoped profits and the share price dropped. And buy now, pay later firm Zip surged on a 27% jump in quarterly revenue. And energy stocks fell following the oil price down. Wall Street rose overnight and is up 3.5% for the week after a pretty good start to its reporting season. While Europe was mixed as the ECB finally lifted its interest rate after an 11-year pause. To some good news, ships are about to come in for central banks, with the cost of freight, a key culprit in driving up inflation, sinking back to pre-pandemic levels. Next week, we'll get an update on official inflation data here, the US, Europe and Japan, and it'll likely cause some volatility on markets, which, despite having a good run of late, are still down at recessionary levels. Notwithstanding, as this chart shows, global economic data not being that bad. As this shows, data surprises and equities are normally closely correlated, but not this time. The RBA's talk this week of arresting inflation has led Westpac and NAB to lift their expectations of where the cash rate will peak. Here's where the Big Four now reckon it will be by December. ANZ's still leading with 3.35%, which will add $909 to monthly repayments on a $500,000 loan. That won't be a Merry Christmas for some. And Jim Chalmers has become the latest treasurer to say wages can't rise without productivity gains. Well, here's how productivity has eclipsed wages for the last 15 years. How much more productive can we be? That's finance.